Eric Muathe to Muathe.com. Let's take a look at a stock here that has recently dropped about 35% for this month alone after a nice run. So what happened here? First and foremost, let me mention here that the stock looked good as of about 2 or 3 months ago when it was breaking out here, as we can see, based on the ultimate Muathe breakout. So based on this principle here, and check this on my YouTube channel or under the description of this video. So what we see here is the stock met the minimum requirements, and let's check that just to make sure. It was a stock of interest. As we were watching this breakout here, RSI was moving to 3-year highs. Everything was lining up pretty good. So RSI moving to 3-year highs here. We can see that the MACDs were also moving to 3-year highs. That's meeting our minimum requirements. Everything looked good and checked out. Now, so if we take a look at the weekly chart, where we went long the stock or we gave a buy signal was during this breakout here, just below or about 1050. Now for a couple of weeks the stock did behave well, moving from 1050 all the way to the current highs here of about $14, and then since then it's just fell off the map. So what happened is what I'm trying to investigate, and I'll show you some of the reasons why I think technically the stock has turned around and turned absolutely bearish. Let's go to the long-term monthly charts. So if we take a look at this long-term all data monthly chart for ARIA, we might start seeing some clues as to why the stock has reacted negatively. So we go back to these highs here, figure out what the most recent highs were, and we had this pullback, this massive pullback here. So we see that that break took place somewhere around there at the beginning part of 2013. So this break is packed with information, because if you use the RSI as a sentiment measure, then the sentiment broke down right there, which brought the stock off these highs here. And so that sentiment is critical, because if you ever come back and touch that with uniform action, you tend to roll over. And this is exactly what has happened here. We tagged that with uniform action over the last 2 months, and now we are seeing this reactional move to the downside. Now what is consistent with previous reactions around this level, so what we can do to test this line is to go backwards. And a good area in a stock chart, or a good analysis of one chart, tends to work in either direction. In other words, if we assume that time is an illusion, then it should work going into the future, and it should also work going into the past. And so let's test this red line going backwards. So let's remove all this stuff and draw that red line one more time. So it happens to be this break here, which gave us a recent turnaround area. Let's test this going backwards, and we see that in the periods when the stock was trading above that red line, for example here, this period, the stock has had a major run between 2010 and 2012 when it was above the red line. And take a look at this most recent break right here, uniform activity rejection on the red line for the highs here of 2004, and the stock would go on a huge decline in the subsequent following years. And again, we see here uniform activity above the red line, back below it, which is packed with information. Above the red line, you had this massive spike. And once you moved back below the red line with uniform action, that was the high somewhere there. Take a look at this period here when the stock was above the red line and below it with uniform action for the highs there of 1997. So one simple line packed with a lot of information, and again, to make it relevant for the current market, we hit that same line with uniform action, and guess what? Already seeing the reaction lower. A couple of other observations on the weekly chart this week. We are seeing the stock move below 50, and that's why we are having another drop, substantially big drop of about 14% as the weekly RSI moves below 50. And if we take a look at the smaller time frame, for example the daily, we can see that the daily made a mistake where it made a fresh daily closing high, an improvement in daily closing highs there, And that, so an improvement in daily closing highs, RSI failed to make a move higher. That negative divergence could be the reason why it stalled around here and there. So keep in mind, I think the key here is the fact that RSI was rejected here when it tried to move above 69.1. Now that rejection came with uniform activity rejection as it tried to move above 69.1. And the best way to show this is take a look at a smaller time frame, or at least zoom in, and let me do that. Now keep in mind this is a 1 year daily. Let's go to the 6 months daily. And on the 6 months daily, you can see what I'm talking about. An improvement in daily closing highs. RSI made a lower high. RSI was rejected. So that rejection was with uniform activity. It tried to move above 69.1, but was rejected with uniform action. I hope you can see that. Maybe I should go to a 6 months daily, 3 months daily. And here we have the 3 months daily chart. You can see an improvement in price highs, albeit a small improvement. RSI did not improve. RSI was rejected as it tried to move above 69.1. This rejection came with uniform activity. Sometimes and often enough, you'll see that this tends to be a reason why stocks pull back. Now let me show you why I think on a short-term basis the stock fell out of favor. It's very simple. This is a 6 months hourly chart, and here I am using RSI setting of 26. Why? Because for me it tends to remove all the excess signals, so I like to use 26 instead of 14, because 26 tends to give me the signals that I need, not too many signals all over the place. But I think this was the key. What happened here is the stock made a fresh hourly high, but take a look at what the RSI did. The RSI made a lower high, and what is more telling is the fact that the RSI on the hourly failed to move above 61.8. And as I always say, this is the worst type of negative divergence. Here it did not move above 61.8 on the RSI as prices were making a fresh high. That's the worst type of negative divergence, and I think that's the reason the stock had this bearish reaction. So keep in mind, whenever you see the worst type of negative divergence, it tends to suggest that a pullback is about to take place. Now there's also another view, and I'll do this quickly here. This break was a warning break. You come back to test this break line somewhere around there. You tag this at the highs there. That's confirmation that you failed to move above the sentiment level. That was the break level there. Again, that rejection, combine that with the negative divergence of the worst kind, with the RSI failing to move above 69.1 during this improvement. And what you have here is an extreme example, but it worked. It's a good example to remind us visually that whenever a stock has all of these red flags combined in a short period, that what might happen here is a major sell-off. And again, the stock was acting well for us, breaking out, but it fell into some bad technical behavior visually, and since then it's fallen off the roof. Eric Muathe with Muathe.com. Be on the lookout for some of these signs, because sometimes they can tell you what could happen next. Peace and blessings. I am here. I am out for now, but I shall be back. I shall be back. Peace and blessings. Woo! Yeah.